Hi guys, I am CA Ritesh. Today we will be discussing the amendments for the direct tax subject applicable for the November 2021 exam. If you go to the institute website in the BOS knowledge portal, in the direct tax section you will find the statutory update PDF which is released by the institute. Okay, so all the significant notification circular issued up to 30th April which are relevant for the November 21 exam and which are not included in the November 2020 edition of the study material are given here. So the amendments are very few. We'll start with the amendments in the international taxation part. All right. So the first amendment is in the transfer pricing chapter. Let's take the amendments one by one. You must have studied in section 26. Section 286 talks about the country by country reporting provisions. Earlier, the threshold limit for applicability of the CBC reporting provisions was 5500 crores. So, if the group's revenue, the whole group's revenue is more than 5500 crores, then CBC reporting provisions would apply to that group and the CBC report would have to be filed. Now, this threshold has been changed to 6400 crores. So now if the total revenue of the group exceeds 6400 crores, then CBC provisions will be applicable to it. There is one more change. Rule 10DB now provides that the income tax authority for the purposes of 286 would be joint director. Earlier this was joint commissioner. Now this is joint director. So these are the two changes. Okay, so first is the threshold limit of the group revenue has been changed from 5500 to 6400 crores, and the authority for section 286 is now joint director. Earlier this was joint commissioner. Okay, so the next amendment is in rule 10DA. So section 92D read with rule 10DA prescribes the documentation that is required to be maintained by an entity undertaking international transaction or a constituent entity. Okay, so the constituent entity was required to file a form number 3CE double A. So the due date for form 3CE double A was due date of return filing income. So form 3CE double A, the due date for this was due date under section 139(1) for the filing the return of income. Uh, Form 3CE AA is to be filed if Form 3CE AA is to be filed by the constituent entity if there is only one entity in India. In case there are multiple constituent entities in India, the international group can decide which constituent entity will file Form 3CE AA. So the information of which constituent entity will file Form 3CE AA is given in Form 3CE AB. All right. So the due date for filing Form 3CE AB is 30 days before the due date of Form 3CE AA. Okay, so this is the concept of Form 3CE AA and 3CE AB. The amendment here is that the income tax authority for filing Form 3CE AA and Form 3CE AB was joint commissioner first, but now it is joint director. Now the income tax authority is joint director. Even here it was joint commissioner first, now it is joint director. All right. So these are the amendments in the international taxation part. Uh, and the last date for intimating the Aadhaar number under the Income Tax Act is now 30th June 2021. Earlier it was 31st March 2021. It has been extended to 30th June. Okay, so these were the amendments in the international taxation part. Now let's move on to the next one. Okay, So in the miscellaneous provisions chapter, you had one section, section 285BA, which imposes an obligation on the specified person to furnish statement of financial transaction. So you must remember that uh, where there are transaction, like if more than 10 lakhs cash is deposited in a year by a single person, then that account was to be reported by the bank. The bank has to report that account. Or if time deposits of more than 10 lakhs were made in a financial year by any person, then that account was reportable by a bank. So bank was the specified entity in that case. Few additions are made uh, in this regard. So we'll take the additions one by one. So the first one is capital gains on transfer of listed securities or units of mutual funds. So in case of capital gains, the reporting entities will be recognized stock exchange, depository, recognized clearing corporation or registrar to an issue, or share transfer agent. So in case of capital gains, these entities will have to report the specified financial transactions. In case of dividend income, the company paying the dividend has to report. Please note that the company who has earned the dividend income need not report. The company who has paid the dividend will report here. Okay. So the third one is interest income. Uh, for interest income paid, the reporting entity will be banking company, Postmaster General, and NBFC. Okay, so these are the three new additions in Rule 114E specifically. Okay, so the next amendment is in the PGBP chapter. So section 44AB lays the obligation to get the books of account audited if the gross receipts or turnover cross the threshold mentioned in that section. So an audit report is to be filed in Form 3CE, 3CA, 3CB, and Form 3CD. So there are two forms of audit report: 3CA, 3CD, and 3CB, 3CD. 3CA, 3CD is to be filed by persons uh, who are required to get their books of accounts audited by in any other law other than the Income Tax Act. For example, if there is a company, the company has to get itself audited compulsorily under the Income Tax Act. So if a company is filing the audit report, it will find Form 3CA, 3CD, because it is getting audited under the Income Tax Act as well as the Companies Act. Form 3CB, 3CD is filed by persons who are audited only under the Income Tax Act. For example, if there is an individual for whom Section 44AB is applicable, then he will file Form 3CB, 3CD. Okay. So the change here is regarding the revision of the audit report file. Just a second. The Finance Act 2020 had changed the due date for filing the audit report. Earlier, the due date for filing the audit report was the same as for the due date for filing the return of income. So I'll take an example of of a company here. The due date for filing the return of income for a company, yeah. So the due date for filing the return of income for a company is 31st October 2021. So uh, the due date for the audit report is 1 month prior to the return of filing due date. So here it will be 31st September. Okay, but the problem here was you must have studied section 40 and 43B. So let's take an example of 43B. The payment, the expenses mentioned in 43B, you can claim those expenses only if the payment is made by the return filing due date. For example, if there is an expense of bonus, if the bonus is if you have to claim the bonus by for financial year 2020-21, then you have to make the payment of the bonus by 31st October 2021. If you don't make the payment by then you cannot claim that expenditure. Okay, so what the problem was that the due date, the time limit that we had for making the payment of 43B was till 31st October. But if we file the audit report by 31st September, we cannot claim the payments that we made in this 1 month. Okay, so the payments that we are making in the month of in this gap, the gap between the return filing due date and the audit report due date, that those payments were not claimed in the audit report. So to tackle this problem, this amendment has been brought in. The amendment is that the audit report which is filed can be revised, and the last date for the revision of the audit report is the end of the relevant assessment year. So the last date for the audit report will be 31st March 2022. Okay. But here the one thing you have to keep in mind, that the audit report which is filed, it can be revised only if there is a case of recalculation of disallowance under section 40 or 43B. Only in cases of recalculation of disallowance under these two sections, okay, section 40 and 43B, only if there is recalculation of disallowance under these two sections, only in those cases you can revise the audit report. All right, but uh, please please note this, that if you have filed the audit report, if you want to revise the audit report before 31st September, then you can revise it for, I'm sorry, if you want to revise the audit report before 31st September, then you can revise it for any reason. Maybe you want to claim a new expenditure, or you want to make any changes in the audit report. You can do it, but you have to revise it before 31st September. After 31st September, if you want to revise the audit report, it can be only for these two reasons: recalculation of disallowance under section 40 or 43B. Okay. Yeah, so that is the amendment. The audit report can be revised, and the last date for the revision of the audit report is end of the relevant assessment year. So it will be 31st March 2022 for your attempt. All right. So that is the amendment in the PGBP chapter. Okay, so let's move on to the last amendment, which is in the salary chapter. Questions are not generally asked in the questions about salary or income from house property are not generally asked, but when the question for computing the total income uh, comes, it includes many elements of these two chapters. So you cannot totally ignore these chapters, and as there is an amendment in the salaries chapter, it becomes an important one. Okay. So, in the chapter of salaries, you must have studied that perquisites are taxable under the head. Perquisites are taxable as income from salary. So, under section 17 to 7A, if the employer contributes to a recognized provident fund or NPS referred in section 80 CCD1, or an approved superannuation fund. So if a contribution is made by the employer in these three places in excess of 7,50,000, then the amount which is in excess of 7,50,000 will be treated as perquisite, okay, and will be taxable under the head income from salaries. Not only this, but the income which is accrued on the amount which is in excess of 7,50,000 will also be treated as perquisite and will be taxable under the head salaries. So what all will be taxed? The contribution which is in excess of 7,50,000 and the income accruing due to that contribution which is in excess of 7,50,000. Both the contribution in excess and the income due to that excess contribution will be taxable under the head income from salaries as a perquisite. Okay. Now what is the amendment? They have notified a formula for computing the accrued income. May that accrued income may be interest, dividend, or any other amount. Okay, so this is the formula. But the good news for your attempt is that uh, you have to remember only this half formula. This part of the formula is not relevant for your attempt. You will come to know that. Okay, let's take the formula bit by bit. So the formula is for computing the taxable perquisite. The formula is for computing the accrued income. Okay. So the taxable perquisite equal to PC by 2. So PC means amount or aggregate of amount of employer's contribution in excess of rupees 7.5 lakh on the specified fund during the previous year, 2020-21. Okay, so the value of PC will be the employer's contribution in excess of 7.5 lakh. Okay, so nothing complicated, that's easy. PC divided by 2 multiplied by R. So what is R? R is I divided by F average. The Okay, so the value of I is amount or aggregate of amounts of income accrued during the current year in the specified fund. So the, all the income that is accrued in the fund will be the value of I. So here you have to keep in mind that. Okay, so here you have to remember that uh, ag- the total income that is accrued in the specified fund account will be the value of I. So the income on the employer's contribution and as well as the employee's contribution will be the value of I. The Okay, so the income on the total amount that is there in the fund to the credit of the fund will be the value of I, not only the employer's contribution, not only the income on the employer's contribution, but income on the total amount that is available in the fund will be the value of I. Okay, so F average will be simply the opening balance of the fund plus the closing balance of the fund divided by 2. So F average will be opening balance plus closing balance divided by 2. So don't forget this divided by 2. It is mostly ignored. It is in the end and it is very small. Okay. Okay, so R is I divided by F average. I is the value of total income accrued, and F average is the value of opening balance plus closing balance divided by 2. Okay. Uh, okay, so we are done with the half formula. Now plus PC1 plus, just a second, I will erase this. Yes. So PC1 plus TP1 multiplied by I. So what is the value of PC1? Amount or aggregate of amounts of employer's contribution in excess of 7.5 lakh for the previous year commencing on or after 1st April other than the current previous year. Okay. So value of PC1 will be employer's contribution in excess of 7.5 lakh for the previous year commencing on or after 1st April 2020 other than the current previous year. So 1 अप्रैल 2020 के बाद जो भी प्रीवियस ईयर हुए हैं अदर देन द करंट प्रीवियस ईयर, सो उन अदर देन द करंट प्रीवियस ईयर जो भी प्रीवियस ईयर्स हुए उन प्रीवियस ईयर्स में वॉट एवर कॉन्ट्रीब्यूशन इज मेड बाय द एम्प्लॉयर विच इज इन एक्सेस ऑफ 7.5 lakh will be the value of PC1. So for your attempt, the AY applicable is 20, 21, 22. So after the first April 2020, previous year 2021 is the only year. Okay, और which will be the current year, और ये करंट ईयर छोड़ के और कोई ईयर हुआ ही नहीं है. सो there will be no contribution in the year other than the current previous year. So that is why PC1 will be 0. Okay, I hope you have understood this one. Uh, Amount of employer's contribution in excess of 7.5 lakh in the previous year commencing on or after 1st April. 1st April के बाद जो भी previous year हुए other than the current previous year. So current previous year is 2021 और ये previous year छोड़ के और कोई previous year हुए नहीं है, then the contribution will be 0. So that is why the value of PC1 will be 0. Okay, so PC1 plus TP1. The TP1 is aggregate of taxable perquisite under 17(2)A for the previous year or years commencing on or after 4/1/4/20 other than the current previous year. So it may be same, just the difference is that for PC1 it was employer's contribution and for TP1 it is a taxable perquisite. Okay, so even here as there is no previous year other than PY 2021, the figure, the amount, the value of TP1 will be 0 as well. Okay, so the value of PC1 is 0 and value of TP1 is 0. So 0 multiplied by R will be 0. They have also given one note regarding this. Yes, here it is, where the amount or aggregate of amounts of TP1, no, sorry, this one. It may be noted that the second part of the formula, namely PC1 and TP1, will not be relevant for PY 2021 since this is the first previous year for which this perquisite valuation provision is applicable. Therefore, this part of the formula may be ignored while computing perquisite value for AY 21-22. So हमें AY 21-22 ही applicable है November 21 एग्जाम के लिए. Okay, they have also given one example to explain this better. Suppose X Private Limited contributed rupees 8,50,000 during the previous year 2021 towards recognized provident fund of Mr. A. Mr. A had also made an equivalent contribution. Balance in recognized provident fund account is opening balance is 32 lakh. Interest accrued during the previous year is 33,44,250. We have to compute the taxable perquisite. Okay, so TP is equal to PC by 2. PC is amount in excess of amount of employer's contribution in excess of 7,50,000. So amount contributed by the employer is 8,50,000. So amount in excess is 1 lakh. So value of PC is 1 lakh divided by 2 multiplied by R. So for computing R is I divided by F average. Value of I is total accrued income during the year. So accrued income is 3,44,250. Okay, so F average is opening balance plus closing balance divided by 2. We know the opening balance, which is 32 lakh. We have to compute the closing balance. So the closing balance will be the opening balance is 32 lakh. Then there is contribution made by the employer. Employee, which is Mr. A, has also made an equal contribution, 8 lakh 50. Yes, 8,50,000. Then there is income which is accrued, 3,44,250. Okay, has anything remained? No, that's it. So the total of this will be the closing balance. The total comes to 52 lakh 44,250. Okay, so this is the closing balance. So F average is opening plus closing divided by 2. So opening is 32 lakh plus closing is 52 lakh 44,250 divided by 2. Okay, so I is 34 3 lakh 44,250 divided by, so 32 lakh plus 52 divided by 2. This comes to it must be given here. Yeah, it is come to 42 lakh 22,125. 42 lakh 22,125. Okay, so this comes to 0.08153. So this is the value of R. So all we have to do is multiply this value of R by PC by 2, and when we do this we get the perquisite 4077. This will be taxable as a perquisite under the head income from salaries. All right. So these are the statutory updates that were there applicable for the November 2021 exam. Few new case laws have also been added. I will make a video on those soon. And yeah, so that's it. If you have any questions, you can always mention it in the comment section. I will try to solve them. I hope you have understood all the updates. All right, that's the end of the video. Keep studying. All the best.